Hi everybody and welcome to Trade with Precision free newsletter. My name is Tamar Mer. Today I want to show you what it's like to trade off support and resistance level. Now I know most of you will be saying we all know about support and resistance, we all can identify it, and we know that it's good levels to be trading off, but the question is, or the real part is, how do you trade off it? Where do you enter, where do you exit, and where do you take profits? Is every time at a level is being tested is a good place to enter a trade? So all of these questions are really up to your trading strategies. But when you have a solid trading strategies and you combine it with a strong level of support and resistance, it could be a very, very good trading opportunity. So let's take a look, for example. Here we have pound yen, and over here we can see this level that I've marked in long ago of 169.5 or 170 thereabout. You can see that there's been touches in the past and price has consolidated around this level as well. And then price broke down through it and consolidated below it. Now at this point in time we can see that price has broken through and had a really good reaction from this move from this level over here, came back, tested it again and move up. Now not every time the price has been testing this level it was a good trading opportunity. So how do you make the difference? How do you know that here it's good place to enter over here, and here it's probably not a very good place to enter because you might have been taken out and then have the continuation and the reaction of that movement? Now if you are a member of our Precision Perspective video newsletter, you would have received a heads up around this area why this was a good place to enter, with all the explanation why I was expecting a big move to follow. So as you can see, it's not enough to know where the level is, we need to know how to trade it. Let's take another example. Let's have a look at EuroCAD. Now EuroCAD, we can identify this level of 1.53 or thereabout. It's pretty strong over here. And we can scroll back and see that there has been more touches. But let's see what happened. If I was trading over here as price came back and tested this level, I would have got stopped out. This was not a good place to enter the trade. Now you might say, okay, I can see that there are bearish candles over here, but sometimes you will see nice candles over here, but yet we will still say we don't want to enter this trade at this point in time. So how do you identify, how do you justify where it's a good place to enter and when it's not? Let's take another example. Let's have a look at dollar yen. With dollar yen, you can see that we have been stuck in this range over here between the 101 or thereabout over here to 103 over here. Now, this is by no means any kind of trade. So what do you do here? Can you enter? What are you looking for? Is this a good place to enter? Or maybe here, is this a good place? And mind you, you could find a place in hindsight when you look at it and you can say, oh yeah, but price did move higher. But can you catch it? Can you actually put in a precise entry and a precise stop loss that you can first of all minimize your risk and also identify your target? Is this a good place to enter? Over here, now that price has finished this area of consolidation, then you pull back into it yet again. So what is it that tell us, watch out, this is about to pull back? What is it that tell us this is not a good place to enter? That's the job of our trading strategy. Let's have another example, a more current example. Let's take a look at Kiwi yen. And let's see where Kiwi yen is at. And you can see that now we are back into this level of support and resistance over here. So where do you enter? Do you enter at the first time it touches it? Then you get stopped out. What about here? Do you enter over here? You get stopped out yet again. What about here? Where exactly is the right place for you to enter? It's not enough to identify that we have a very nice support and resistance level over here and we have the expectation that price will continue to the upside. But what is it that help us, that tells us now it's a good time? What sort of things prevent us from entering at this point in time, or maybe help us in entering at this point in time? You see, all of those questions, they shouldn't be questions when you have a strong trading strategy. All of these questions are being solved with a checklist, really. When you go through your trading strategy and you say, yep, all of those are happening on my trade setup, and therefore I'm going to enter this trade, or there is something in it that is not presenting itself in my setup, and therefore I'm not going to take this trade. So the point I'm trying to make here, that not every time the price is bounced off a level of support and resistance, we should run into a trade. Having support and resistance as part of our trade setup is a fantastic way to increase the probabilities of our trade goes to target. However, one element is not enough. So if you want to learn more about how we do things at Trade with Precision, what sort of checklists do we have to look for trade setup, how we utilize those level of support and resistance to increase the probabilities of our trade setups, and how do we also use them to identify places to take profit, then please join us for this week free webinars. We have 2 free webinars for you this week. The first one is the 5 pillars of trading strategy, and that's going to be run on 9 a.m. London, 6 p.m. Sydney, and 8 p.m. Auckland. The next one is how to become a successful trader, and this one is going to be run on the 23rd of April, 5 p.m. Los Angeles, 8 p.m. New York, 10 a.m. Sydney the next day, and 12 p.m. Auckland the next day. You can register to both of these webinars. All you have to do is go to tradewithprecision.com/free webinar and register to this event. And I look forward to see you there. Have a lovely trading week, and I'll speak to you soon. Bye for now.